Добрый день еще раз.
Good afternoon once again. I take this opportunity to congratulate everyone on the start of winter in Moscow. An excellent day from the early morning. I hope our presentation to you will be as excellent as this day. We're going to discuss how we can raise the proceeds of non-government pension funds to the direct and venture capital market. And the composition of our panel clearly demonstrates what we have in this respect in Russia. At this session, we have a representative of a development institution, Mr. Kachay from Rosnano, and 3 representatives of direct and venture investment funds. Besides, we don't have a single representative from the regulator, that is from the central bank, and we don't have a single representative from the executive authorities, Ministry of Finance and Ministry of Economy, I mean. And the structure of our panel clearly demonstrates who needs all this talk, that is, who needs proceeds of non-government pension funds in the direct market, in direct investment market. Now, a more formal presentation. Oleg Konev on my left-hand side is from direct investment fund Da Vinci. They manage 3 funds. One of these funds was established in partnership with RVC. Alexey Kachay, as it said, represents Rosnano, a well-known entity. Zhukov is a private investor, and yes, and the head of a venture fund. And Mr. Konev, he represents a RVC fund. Do I describe it? Fund RBV Capital. Do not mix with our managing company. Sorry. If I misspelled the name of the company of some of the speakers, I apologize. We start our discussion by a sort of vote. Our moderator mentioned on several occasions that you need to take voting panels. Is there a single person? Yes, we have some people to vote. Let's start. Our first question, put it on the screen. We represent the venture investment market here. We understand how risky these investments are. You can finance a startup and it will be dead soon and you will not recover your initial investment. You are a participant of the venture investment market in Russia. Do you believe that a portion of pension savings should be invested into risky venture projects? Well, do you believe, well, that it should be done or not? Do not forget you are a participant of the venture market. Why people vote? Are we going to see the results immediately on the screen? Yes. We are running out of time. Yes. 57%. Nearly half of the people believe that it should be invested. The other half that it shouldn't be invested. Our second question is somewhat different. If you are a participant of the pension system, you are making monthly investment in the pension fund, and you want to have a pension in the future, do you believe that part of your pension saving should be invested into venture projects? Do not forget that you are not a venture market player now, you are a party of the pension system. and you're a future retiree or maybe even an actual retiree, look at the people on the panel and give a correct answer. Well, it seems that only one person changed his or her opinion effectively, both in the capacity of a venture market participant and in the head of a future retiree. You still believe that this money should be channeled into this segment. It is an unexpected answer for me, because for the first answer, I believed that the bigger majority of the surveyed should answer yes. But before we switch to that, before we switch to the global experience, let's invite Alexey from Rosnana, Alexey Kachay, to describe us the background of this issue, how pension fund proceeds were invested in the venture capital market. Good afternoon, dear friends. It's not the history of raising funds, but it's the history of dealing with this issue, and I will explain why. In Rosnana, in our group, we've been looking into different matters which we describe as institutional matters. That is, how the market should be structured so that we have proper tools which will respond to correct signals. And when we looked into the issues of funding, naturally we looked to our Western colleagues, what are they doing there? We see that the United States of America is the most developed market in terms of regulation or freedom of regulation. This market lived through the major boom of venture investment back in the 80s, and it coincided with the time when the regulator, that is SEC, suddenly ruled out all restrictions on investment of pension proceeds into the sector which they later on described as private equity. And soon we've seen bubbles emerge. But anyway, we saw new major formations. For example, a non-government firefighters pension fund of New York earned enormous profit, and the teachers fund also made money, had hand over fist on some deals. When we tried to look at the Russian situation, we started to look for sources. And we see that there are main three institutional sources of funding. That is pension funds, life insurance system, and banking sector. These are the three main sources for investment. And we tried to structure the laws, or at least to understand what the laws say about that in this country. The banking money, how banks exist and manage in this country. Most of them are commercial banks. Commercial bank is not an investment bank. Therefore, they don't have longer dated money, or they are subject to such a system of regulation, creation of provisions that they are not good for that. How do they exist with their small capital? They create inside of their banking groups, they use, style their names in such a way, name of the bank, dash capital. Business will find a way to invest their money. In this respect, each of these groups is a sort of investment boutique, or if it's bigger, it's an investment bank. And they operate in the private equity sector, venture investment sector. They do it on their own. Then we looked at insurers, life insurers primarily, how many people who do or who work in the voluntary life insurance market? Just very few people. If you deduct those unhappy people because they have raised the mortgage loan and they have to insure their life, it appears that there is no voluntary life insurance as such. Effectively, the investment resource which is inside of the insurers seems to be very small. And then we switch to the biggest source of fund, that is the proceeds of the pension system. They can be divided into the voluntary pension reserves, which are set up by corporations in this country, and the pension savings, which became possible only after our country, upon reforming the system, switched to the pension savings component. The trend that we have now, on the other hand, says that after the year 2000 and even after 2010, against the backdrop of high inflation and limited opportunities for investment, pension funds could not outperform inflation. The performance of their savings was negative. However, we come here with our proposals. We have a variety of investment tools that could have helped you, that could help pensioners to increase their savings. Unfortunately, in the current environment, even if you do the same what you did in 2011 with the Bank of Russia understands now the problem. Bank of Russia now understands what we're talking about. Well, I hope RVC will forgive me. We don't invite people to give access to high-risk venture projects. No, we're talking about private equity segment in general. If we look at what our funds are doing in this segment, well, those networks of cinema halls, movie houses, which are funded by the European pension system effectively. Many projects that we can see and of which we make use on a daily basis in Moscow, St. Peter, and some other cities, major projects have been built thanks to pension proceeds, but not thanks to Russian pension proceeds. And the major concern of us today is to try to bring home the idea that there is not only a public organized market where there is securities, trading, etc., where there are reports to the regulator, but there is a non-public sector of non-public investment, which is called private equity, or if you call it private equity, if you talk about more risky segment of that private equity market. Let's try to tap this market, and let's try to build jointly with the central bank and investment banks a reciprocal system of promises and assuredness. I'm talking about 4 to 5 trillion rubles. That's, if you even forget the results of freezing the pension savings, it accounts for something in between 4 to 6% of our GDP. That is the investment resource which is not utilized now. And it is well, a subject of step-by-step regulation. Even 1% of that will be enough to revive this market.
Private equity и венчурных инвестиций.
Yes, it's clear, Alexey. Thank you very much. A couple of clarifying questions, if you don't mind. You said that, first of all, there was a banking sector, then an insurance sector, then we got to pension money. So what year it happened? I think in 2011 or 2012. This is when we tried to talk to the key players in the market, those who are in the market. So if we look in the retrospect from 2011, 2012, can you give us 1, 2, 3 say shifts that actually moved us closer to resolving this issue. I would say that one of the shifts that we had, movements forward, the one and the key one, before that the CBR wasn't ready to talk about, this is going to the mode of insurance that ISV is working with. Before that, no discussions were possible. Nobody even opened the door for us. After NP, National Pension Fund was talked, and then the first step was made, and the Bank of Russia came up with the regulations of how the pension funds money could be utilized. It's now in Ministry of Justice is considering this, so they found some common ground on that. So now we'll look forward to seeing the final stage of this document. Thank you very much, colleagues who are from the funds. It's quite a strange situation, interesting situation, because the money from non-government, non-state pension funds, in this system there are several stakeholders. There are people who are interested in the final result. And here we lack 3 out of 4 categories of stakeholders, and we plan some discussion. And now, whom we're going to be talking to, whom we're going to be passing our messages to. I would like to ask Oleg to extrapolate on the statement that Alexey introduced. What's happening in the West? Show us the figures, volumes, and how often how non-state pension funds probably don't even have public pension funds, how they use their capital in the venture market, in the venture capital market. Thank you. Is it possible to put up the first slide? I would like to show you the structure of investments, how it moves in the foreign countries, the countries that went along this path over 40 years, first in the United States and in Europe, and as of today, there is no one large company in the world that pension funds would invest into. The key sources for investment in private equity and venture companies, of course, this is the pension funds. There are some sovereign funds as well, some public funds, something like RFP in Russia, but fund of funds, these are the. In Russia, we only have RVC. That is the full-fledged fund of funds. Funds of funds, the key point is to select teams that have different strategies, that are focused on different sectors and niches, and as a result, pension funds, they receive an aggregator that distributes their money in different investments. I can give you an example. One of our investors, largest fund of funds of the world, 2,000 companies it invested over the last 30 years. Through fund of funds, did it through the teams, to private equity teams all over the world. They were everywhere, in Microsoft, in Yahoo, in Yandex, in IBM. The next slide, it shows the structure of pension funds. And if you look at how it is in Europe, then half of all the investment in the real sector goes from pension funds. State sovereign companies, insurance companies, pension funds take over 15% of the share. It's very interesting. Nobody asks the question, but the investment is quite profitable. If you look over the last 10 years in private equity investment, it's more than public companies or in bonds or even in real estate. It's about 13%. This is private equity and venture altogether. It's quite a good profitability, and I can give you an example. Global fund of funds over the last 40 years, it shows profitability of about 15% over 40 years. And the profitability in dollars, when you look at it, it's quite a large amount of money. It's about $25 billion. The next slide. So how much pension funds allocate in Europe and in the US in the real sector? About 20 to 30% to 50%. It depends on the appetite to risk. There are biggest pension funds. California fund, 300 billion in management. It's one pension fund invested in global projects. Half of it goes to the United States, and half of it goes to other countries, and some of it was in Russia. It's quite a large amount. The biggest ABP is the biggest manager of private equity. They invested in it is one of the biggest managing pension assets in Europe. And this business brings us to the point that there is nothing horrible for the pension funds if they invest in the real sector. The level, the percentage that should be allocated by the pension fund, there should be distributed properly through different filters, and of course there are no ideal situation. There should be fund of funds like RVC that they properly do diversification, and this is how you mitigate the risks. And this is a great push for the real sector for any country, for Russia. And Russia will have to do it anyway. If we don't do it, our economy will not grow. Thank you. Thank you. Now we're going to the discussion mode, and we have a lot of questions here. So the question number one, it's to Peter and Alexey. Both of you, they're so-called first-time managers. These are the managers of the funds who are managing their first fund, right? Is that right? I'm still managing my first fund, and there is a second one. And in general, yes. According to classification of institutional LP that provide money for private equity and venture capital, the first and the second fund under management is a first-time managers. So what is the big flaw of first-time management? Those who run equity fund for the first time, what is the main flaw? The main flaw is that they cannot show result. They cannot demonstrate the profitability cash on cash from their previous experience, previous funds. And I'm sure when California pension fund decides to whom send the money, so the talk is simple. So if you can demonstrate in numbers that you have some success, then okay, but then you get the allocation. So the question here, and another statement that I would like to make, that oftentimes from the state or people who are affiliated with the state and development institutes or some other authorities, they often say guarantees, that the state cannot give the money or allow someone to give the pension fund money unless there is a guarantee of return on this money. As we understand, this 15% of profitability, of profit, it doesn't mean that each fund made 15%. And I think that everybody in the audience understands this. It means that there are 12 funds, there are 7 that didn't make anything, and one made 5%, and the other one is made 80%. And so, and if for non-public pension fund, the employees of this electric energy, so pensioners, if they invested in all of their money in that, and if the money gone, so they have nothing. So we, as the first fund managers, so what we can guarantee, what we can give to the government to mitigate the risks, to ensure that the money will not disappear. Well, first of all, I was asked to be on the panel at the last point. Probably I'm replacing, substituting those representatives of the state that didn't come. So, and in general, I'm a nerd, and for me, it's very difficult to answer these questions. And thirdly, this is my second fund. I also established my fund, and because of the Russian specificity, I didn't become a partner. So now I established a second one where I'm partner. And finally, in this fund, we have something to show over 11 months. We worked with Mr. Povalko, and tonight we will be representing our deal. So we will be showing his deal. He's the only foreigner at this conference. We spent 11 months for this deal. For us, IRR was 144%, and for his IRR cannot be even calculated because the deal was $550 million, and the first closing was. So there is something to show for us. So if to answer your question, I think, let alone that Russia is the country with unpredicted future, but it also has an unpredicted past. And I think that it's impossible to say anything in terms of pension fund either. So I don't think that nobody in the world gives pension funds any guarantees. That's why they called limited partners. We are general partner who is responsible as part of this limited liability that is in the equity. Abroad, it is customary to insure, but in Russia, for some reason, insurance don't work. The short answer to your question would be no, nothing can be guaranteed. And guarantees in the world, in our area, this is reputation. If reputation is not enough, then I'm afraid there is nothing to offer. So I would add something to what Alexey was talking about, to the history. At the beginning, in 1970, in 80, when in the U.S. Pension funds were permitted to invest in the private equity. So it was also an infant, the same as our market, and many funds, they didn't have any track record, as we don't. There was just an allocation, the depth of the market, and then it just allowed the market to develop. This is what we are talking about. This is what Russian market needs. We need liquidity, we need extra money, and then we'll have the track record. So those single deals, but the portfolio. So in other words, you're saying that in 70s and 80s, so when that permission was given, there was a lot of first-time management without any track record, and the pension system took on the risk, and it didn't work. In some way, it was a public and institutional decision, so it's impossible, to find this turning point in the market development. So this turning point is actually regulated by the government. Without the intervention of the government, it's impossible to do. And you're right, the sources of financing, the big funds that were established in Russia, and you can actually count them on one hand. The base of the capital, this is also American pension money, endowments, and European pension money, something that wasn't named. So therefore, private equity, by definition, will not go first, won't be a pioneer on a big scale, and it won't be the investor of venture funds. There must be the depth of the market. There should be enough liquidity, enough money at every stage of the company development, on the profile of risk return, and this is the point that can be applied to a risk and guarantees that can be given by investors. They're not needed because in pension funds, I think it was 5%, this is what they could allocate. But high returns with high risk, if you allocate just 5%, it's more than conservative for any conservative investor such as pension fund. And in fact, at this stage of market development that we are, you don't need a track record. You need to decide on the set of competent companies that are not so many yet, but there will be more, and give them an opportunity to invest. And in any case, naturally there will be mistakes. It will give a continuous effect in general. Yes, I agree. There will be like a non-regret move. We just need to do it and that's it. Just do it and that's it. So I'll give the floor to Alexey, but I would like to add a couple of things for myself because I'm also a participant of the market, of venture investment market, and of course I deal with different fundraising process and how the state can protect itself, and it protects itself with two mechanisms. The first one is dollar to dollar. The state thinks that if the state gives 1 ruble and the private investor will invest 1 ruble, then it's more secure than the government gives 1 ruble and the private sector gives nothing. About 50% of the capital should be put in that bowl. So in other words, we're talking about a certain structure, a venture fund or private equity fund. Just imagine it as a jar, and in this jar the state puts the money, then on top there is a private money, and then on top there are another 10%. They put the money of those who are going to manage this money, and the state thinks that it's not a bad protection. And I'm actually inclined to share this idea, because if from your own pocket you put a share of the money in the jar, then naturally you won't be participating in some strange deals or deals that you're not happy with. And Alexey, you want to add here? As I understand, there is quite an experience for you with your relationship with the government, so you may say a couple of words on that. Here there are several things that I would like to draw your attention to. First of all, even when the United States, they started regulating the market, they put the cap in 5% cap. Not all the funds decided to invest. In fact, the very little number of them started investing in private equity, and when the rest saw how much they make in this private equity, they also started participating. That's why non-government funds will be also varying their risks. And then the regulator took off the cap. Was there any peak? No. Everybody stayed with 5%, and for quite a while the market was going from 5% to 7%. It took them 20 years to get from 5 to 7. And the trend is when pension funds, they don't have big sources of income and profitability and mitigated risks. These are few that grew up to 10-15%. All the rest of them, all the pension funds, they are based around those 5% from the whole volume of their assets. It's not rocket science. It's not some incredible peak in terms of redistributing the resources in the economy. When you look at the pension funds, if you flip the picture and you see what the industry got, but the industry got from 1/4 or 1/3 of resources due to those 5% at the beginning. First of all, how the market exists where the pension funds make money. So there are banking deposits, and clearly everything is calculated. As soon as we get to the market of other financial instruments, there are bears and there are bulls. Some people get their money on following the market, and somewhere on growing the market. So they only can get returns only if the company is growing. The point of private equity is to find the pearl that has quite large potential to grow and make money on the growth. There's full synergy and synchronization of interests LB and GP. Nobody's going to make money if it's going to be fluctuating around zero. So that's why the key point here at the market is to cut off fraud, to see those who are shady. So this is the key idea of regulator when they work with this. When the motivation is properly built, your money and the area of where you're going to make the money, it's all synchronized. We said that in the economy, they spent a certain amount of money to work with the banks, to get rid of bad banks. And this is what happened over the last 5 years. And it can be measured against all the pension savings in general. We are talking about the opportunity for a number of pension funds who think that they can manage the risk and they can invest 1-2% of the money they have. This is the limit of risks in order to create the whole industry. So the message is, in other words, that even these pension funds will make a bad bet, so that for the system is going to be much better, and they're not going to be a negative impact on the pension situation and economy in general. No, there's not going to be a significant impact. So there is a portfolio, and in many cases you don't even have to go to the public insurance companies. But if the portfolio principle doesn't work within some pension fund, but I can't hardly imagine such a situation when 1% will destroy the whole pension fund. So it's just unimaginable, really. But when the state can simply offset this 1%. So I will give the floor to you about statistics and the profitability that you mentioned.
Прям всем рекомендую. На сайте
Recently, I reread a very interesting document which I strongly advise to all of you. There is a brochure called The History of Development of the Venture Market in Russia. 1993, 1994, 1995. That's just an adventure. And the market was there even at that time. And the pension proceeds close to the statement of venture investors mentioned even 20 years ago. We looked at the market statistics. Probably you noticed that there are plenty of figures, but there are no figures illustrating the returns. Not because there is no return. No one just doesn't know. There is no accumulated statistics describing efficiency of the private equity and venture markets. That is to support the message of Alexey. Some enthusiasts, pension funds, may be invested in the venture market to the tune of 1% of their portfolio. No. If you looked hypothetically at the Russian situation, if someone entered this market 20 years ago, today no one will see whether there was any return or not. But probably they would have some negative feeling towards this return, towards these earnings. That is, of the 23 original funds, only one demonstrated return, that is in Tatarstan. And the rest, I like the statement they made, just how they describe the situation. The other funds are still fighting for a return on their investment. A brief comment on that. No, there is some statistics of the private equity. We have some veteran teams which have been in this market since mid-90s who managed to hook foreign investors. The average weighted return is above 30% in dollar terms. There is some statistics. It's a profitable investment. And where can you find these statistics figures? This is their internal statistics. However, they show it to investors. We have common investors, we meet them. Okay, I did. They The European Bank for Reconstruction and Development, it's a major institution that is very important for receiving Western institutional money. They send their reports to Cambridge Associates. Once you disclose your statistics, you can raise more funds. The question is why they should publish the reports here if there is no access to pension proceeds here in this market. But the market is there, in particular in the technology sector. On the dawn of our internet boom, all those are portfolio companies of the funds that you mentioned. There are very few of them. You can count them on the fingers of your hand. And well, it is an example of successive of multi-case investment. However, our market is very special. You can allow to invest pension proceeds in different ways. You can do it in a systemic way. You can do it to a variety of teams which are not linked to major players. Or you can do it, you can give it to a limited number of managers who are already operating in the market. These managers either linked to oligarch capital, because unfortunately our market looks like that pension funds are often inside of oligarch groups, and management teams which deal with private equity investment and venture investment are still there. The danger is that the appearance of pension proceeds in the system will become an additional tool for non-professional market, non-core market to increase its liquidity. The regulator should take some steps to prevent the situation. These should be professional teams which are outside of big financial groups. Although for oligarch groups, and this is a popular example, once Usmanov made success. People started to invest in the sector and lost a lot of money. At least we see some activity there, we have something to discuss. There are some companies in this market because the money of oligarchs and public money enter this market. The private funding is very limited, corporate is limited, and insurance money and the pension money doesn't exist there. Well, there is some herd effect. When Usmanov started to invest, other people followed instead. Everyone wanted to invest in Facebook, and plenty of family offices of our Forbes 200 list lost money in that area. Alexey, you wanted to add something? Well, I will make a small contribution if possible. It seems to me they should separate corporate funds, better give pension proceeds to independent funds. The point is that the entire USA industry is built on independent funds. During our first panel, we talked about corporate venture funds. But corporate oftentimes means somehow linked with our state. Well, our economy is 70% state economy, and only independent private capital can reverse the situation. Venture sector, being very small, will not do anything on its own. But even if here we'll focus on only corporate funds, then there is no hope. I will say that it's not a matter of being non-professional. I didn't mean that they were non-professional, but what I meant, they say they face a number of restrictions in the way they create their portfolio. Some corporate restrictions, I meant. While with this qualification, yes, I would say that we need more independent funds who will not belong to any territories, clusters, or corporations. There will be no strings attached there, and they will work only with a view to increase their market cap and to make an exit thereafter. It's quite understandable, the message is clear. We have a small portion which was prepared from the original platform program. I would like Oleg to share some information with us. We have 3 representatives from private and public funds, and only one of them, Oleg, knows how to use the money of non-government pension funds and to channel them to direct investment market. We'll invite Oleg to disclose this secret with us. Maybe we'll have some business to do of the decision. Yes, really, we're not done as yet. Nevertheless, well, you've started or what? Our slides are secret so far, but in the recent year or year and a half, we tried to raise investment into the real sector from pension funds. I will say that about a year ago, we saw emerging a notion of a specialized financial organization. Potentially, pension funds can invest into the real sector with minimum risk and with guaranteed returns. Roughly, on the back envelope, about 80% is invested in federal bonds and deposits, 8 or 9% interest rate. The balance 20% can be invested into the private equity. Well, 80% that were invested give a guaranteed return on capital at 5% rate, and the 20% that was invested into the venture market on average will generate 16 to 17% of return, which is very good for a pension fund. On the one hand, you have a guaranteed return on capital with minimum risk because federal bonds are reliable security. And what is important, the market will be channeled to the real sector. We cooperate with our regulator, with the central bank on that. There are some things which do not make them happy. If we talk about the oligarchs, they already invested in the real sector, and the central bank doesn't like that they did it in big amounts. What else doesn't a regulator like? We want to enter with these tools into the so-called 40% savings part, and they push us to the 10% restrictions. With 10% we can do it right now. The problem is that the pension funds spend all of that on their own needs. 40%, there is such a collision. They have a variable and a fixed coupon. As soon as there is the variable part, that is private equity with unclear returns in future, they immediately put it into a different product, and as a result there may be a mezzanine fund with a certain return, but mezzanine investment is no good for venture because you should have a certain fixed return. It is okay for private equity at a later stage, but the best option will be to a mixed option, that's private equity and mezzanine. But we are an active member of our association. At some time in the past we tried to create a fund of funds, and we worked jointly with VAP. We invited the largest American fund, number 3 in the world. However, there were certain constraints, and unfortunately this product did not take off. But we were not discouraged. We continue to work. and special financial organization. Do you understand correctly? It's a legal status. Their match with pension funds is 1-to-1, or theoretically several funds can invest in one fund. Diversification is preferable. We should have at least 5 pension funds, and preferably jointly with insurers who don't have any restrictions. Diversification from the top and diversification among team. We should have more teams, and the average return will be the same as 15, or at the level of 15 to 20% as abroad. I'm sure that Russia's economy can demonstrate such performance in the next 15 to 20 years. It will be very beneficial for Russian pension funds. Thank you, Oleg, for this interesting information. I think that further development will be based on your experience. I hope that the central bank and other stakeholders will have a high opinion of that. And the role of GP, there is no GP. There is a GP, general partner, and that's the managing company. We saw some other teams. The role of GP. We have 3 minutes more. There was a request. Maybe. What is your opinion now? Have you changed your views after this session? We have 2 questions again. Put on your hat of a party to the venture investment market and clearly understanding the risks. Say whether we need pension fund proceeds in our industry or not. I hope you have not forget your voting panels. And we'll see whether we provided any compelling evidence. Clearly, we have 1 development institution and 4 representatives of funds. I will remind you that we don't have anyone from the regulator, from executive authorities, and from pension funds. I represent all of them. I am acting on their behalf. There is a clear improvement. My colleagues were quite convincing. It needs to be done clearly. And it is not only necessary, but also possible. Thanks for attention to everyone.